Funsupermart.com.
Japanese equities have surged since mid-November 2012. Can you share your views on why that has happened, as well as your outlook on Japan over the next 2 to 3 years?
Well, in Japan, there's a new prime minister in place, and that has led to a lot of significant changes within policy making and so on in Japan. Now, the new prime minister in Japan, Shinzo Abe, has proposed quite a few interesting policies that should be quite positive for Japan if he's able to push these things through, and that includes fiscal stimulus, monetary stimulus, and structural reforms. Now, so far, since the middle of last year, there's been a lot of expectations that he will push through these changes. And we have seen some changes are already being fed through into the Japanese economy, starting from the weaker yen to a much firmer decision making at the policy level, with the Bank of Japan being a lot more aggressive in terms of trying to boost the economy by tackling the problem of deflation. So there has been a fair bit of positive news coming out of Japan in terms of firm decision making, firm policy making, and hence the market has reacted. Now, over the next 2 to 3 years, do you expect things to be positive for Japan? If the momentum continues, if policymakers continue to make the right decisions as they have over recent months, we think it will generally be quite positive for Japanese equities over at least the medium term or so.
The rapid depreciation of the Japanese yen has supported both the economy and equity market performances. What are some of the sectors that should benefit as well as those that will suffer?
Now, what is essentially, if you take a step back and see what has changed, at least in the last few months or so. Now, the yen has weakened, and the yen pretty substantially over a short period of time. Okay, and the second part is that we have a very there is a new Bank of Japan governor in place. Now, and that the new Bank of Japan governor has said that he'll do whatever it takes to reach an inflation target, which implies possibly a fair bit more in terms of printing of money. Now, what that all means in that sense as well, that a lot of inflation expectations are coming through. Real estate has done particularly well. Some of the banks have done relatively well. Some of the exporting companies are expected to do a little bit better. And as a result, that has lifted the stock market. Now, if the question then is, what next? Well, some of the inflation expectations, if they actually come through, would generally be positive. Again, I mean, for the real estate companies and for banks as well. And generally, if the yen stays where it is, Japanese companies would generally be a lot more competitive. And you would see business conditions generally improve for Japan.
After the recent stellar performance, does the market has more room for appreciation? What are the likely catalysts as well as key risks that investors should be aware of?
I think that actually, if you look at the Japanese market, it's been declining for a substantial period of time. With the recent surge in the market, it's just essentially just catching up with essentially the rest of the world. Now, when you look at the key risks and of course the opportunities are all in valuations and what assumptions you make in valuations. And when you look through Japan, there are some decent companies in Japan that still trade at sensible valuations. The key thing is identifying these companies and assessing the prospects for these companies. And within Japan, you have a lot to choose from. In Japan, there are more than 3,600 companies listed within the core benchmarks that investors typically look at. There are 1,600 companies or a few thousand companies there. So there's a lot to choose from, but investors, we think investors should be picky about the companies that they invest in and how some of these companies will benefit from some of these measures that are being put through.
How does the fund manage the currency aspect in the evaluation of investment opportunities? And how does that relate to non-Japanese based investors who saw a majority portion of their returns eroded alongside the rapid depreciation of the Japanese yen recently?
Now that's a very tricky question because the yen's depreciation has helped some companies, and as a result, their earnings are being ratcheted upwards. There's quite a number of upgrades for companies that are very, very sensitive to the yen. Okay, and as a result, you see the stock prices of these companies go up while the yen declining. And when we look at companies, it's really down to whether these companies are good enough to stand on their own, okay, and whether they can withstand, if they will benefit from some of the policies that are being put through, whether it's the weakening of the yen as a result of what the central bank is doing, and so on and so forth, okay. I think when it comes down to investing in Japan, we think that finding good companies is very important, and that they will withstand some of the headwinds that have been facing Japan, because you do face a lot of issues within Japan itself, from some structural issues, from very fragmented industries and so on and so forth, I think. But what these policies will do for companies is to provide a nice tailwind, especially for the better companies, for the better run companies, and hence we think that picking good companies is key, and that if these policies actually work in Japan, that they will provide a nice tailwind for these companies to do a little bit better. And that's how we think investors should think about when they look at Japan.